Hello traders, welcome back to the channel. This is Jonah with Trading the Charts Pro, and guys, in this video I'm here to bring you 7 stocks that you can buy if you have a small account. These stocks have tremendous upside, so stay tuned. Let's dive in and break all of this thing down right here right now. Let's go. Alright guys, so first thing, before we start looking at all of these stocks, we have to look at the overall market to see, how is everything looking. And if you're in the markets today, guys, you can see clearly that tech has officially broken out and we are on our way back to the upside. Alright, so let's break down this chart a little bit more in details. If you want to see me talking a little bit more about overall thesis of tech, just look at our last market outlook video from last Saturday. The link should be down below and you will see. All right, so guys, right here, looking at the QQQ, which is, the tech ETF, we can see clearly that today officially, guys, tech has broken back above the 50 EMA, right? So we see where right around this area, price was having a hard time to break out. Also, we had this downtrending line short term that was preventing tech from moving higher. So now we start to get the move as Biden is about to speak tonight, talking about infrastructure plan, new funding and all this stuff. This is all good for the market. In as far as tech goes, we have cloud, we have clean energy, we got software, we got semiconductors, all of these stuff that will get some benefit from the infrastructure bill that comes out later on today. So we are not really trading on the bill, we are trading on the technical. So before, we were looking at this pattern here as a inverse head and shoulders pattern. So basically right now the bill is just something that is technically boosting the price action to move out in the direction that we were already anticipating based on the technicals. All right, so we got the breakout here. The only thing I would say is that we still want to be a little bit cautious around this level. Once we take that level out on the upside, then we are pretty much clear to go all the way up. So when we get back, or when tech gets back to this level, we want to see a clear breakout. We don't want to see another reversal coming back down to the support level down here. All right, so this is how I'm looking at that. Next, let's look at the SP 500 real quick. When we look at this, guys, we see clearly S&P 500 break out of what was a pre-anticipated potential double top. But remember, I also said that we can get a bull flag pattern built right here, and then we break out, and that would enable price action to continue moving to the upside. That is what we got right now. S&P 500 breakout, and we're looking for that to continue higher with the support of the infrastructure bill. All right, so that's good. When we look at the Dow Jones, guys, the Dow Jones is not really doing anything spectacular. See, we're just hovering right here right now. Is it going to be a situation where the Dow Jones pretty much just build a nice bull flag here and then break off for the upside as well? I think that is very possible because price action is not getting rejected, right? What rejected means is that when price gets to a resistance level, it immediately sells off and start to go lower. This is not what we're getting right here. We're getting a situation where price action is at resistance, but it's just building momentum to eventually break out and continue moving to the upside. So that is a good sign. When we look at the overall market, we don't see anything that's about to come down right now. I didn't look at the IWM, which is the Russell 2000, but let's look at the IWM. Let's look at it, see what it's doing, because small cap stocks are just as important as well for the overall market to move higher. So with the IWM, we're seeing where price is bouncing off the 50 EMA right here. So as long as we can get back above the 20, that opens the door for price at least to start moving back up. And then when I look at this also, I'm seeing where there is a horizontal support right here. So the market technically, our IWM small cap stocks, they were in a very nice uptrend, and now the trend has somewhat started to change because price action has started to flatten out. Okay, and this is very important, guys, in terms of understanding all the trends that the market moves. So we run up and now we're in a sideways trend. We bounce off the support twice, and here we are. As long as we get back above the 20 EMA, then I'm looking to see the IWM come back up into the 230 level, which is the 2,300 level for the Russell 2000 index. Okay, so now let's look at these 6 stocks that I actually have for you if you have a small account. We're going to break down the patterns. We're going to talk about why these stocks are good stocks for you to buy, and on a technical basis, why do I think these stocks will go higher. All right, so fuel cell, guys, fuel cell was in a very nice uptrend, head all the way up to $29, and then we got a 50% retracement somewhere down here where we found support once. All right, now when it comes to pattern recognition, we found support, came down, found support, and we bounced and we pulled back. We hit the same support a second time. So in my mind, because I understand pattern right here, I'm seeing the potential where this thing can start moving back up, and this pattern here is called a W pattern. All right, so I like this because technically right here, right now, price is at $14. If you buy this right here at 14, your stop loss would be, you know, below 1169, which is where it tops support twice. So if it breaks below 1169, I would no longer be in this as a trade. So my stop loss would be around 11, probably 60. So I'm technically risking around 3.40 cents, all right, in order to make a projected, let's say we're looking for it to come back up to 24. It can also get to 29, but I don't like to hope that it's going to get all the way back to, you know, the last high. So I like to, let's say, around 60 or 70% of the way to the upside. When it gets to the hump of the W, you will be cautious and look out and see what happens. So even from 1403 to 18, that's still 4 points, all right, which is still pretty good. So risk around 3 to make 4 short term, that is still okay, but our longer term, our further projected target 2 level would be $24. All right, so from 18 to 24, that's another 6 points. So from 14 to 24, that's 10 points, if I'm right. Yeah, so 10 points to the upside. I like that. You're only risking 3 points to make 10 points. So number one, the first stock that I actually like right here, right now, is fuel cell. Earnings is behind us, so we don't need to worry about earnings. We put a stop loss below 1160, and we let this thing ride. With a small account, you can buy 200-300 shares of this thing here. So you're pretty much risking about $600 buying 300 shares of this, risking 3 points per share. Okay, so that's the first one. Second one is Sol, and the pattern here is pretty much very similar, guys. Sol was moving up very nicely, and you know, it came back down pretty good, hit support one time and then bounce, come back, hit the support a second time. However, I'm a little bit cautious on this one a little bit because see, run up to the 20 EMA and now it starts to recover, sell off, come back down. But as long as it doesn't break back below 970.79, then I'd look to try to establish a small position here in anticipation of a move back. First level $16, second level around $25. All right, so second one is Sol. One more thing we have to take a look at is see when his earnings. We don't really like to hold trades over earnings because things can get, you know, completely offset by earnings. Okay, Next stock that I want to bring to your attention is XPEV. So this is actually an electric car company. As when we look at this thing, very nice consolidation between 17 and 21. Price breakout, run higher, pull back, and eventually we came back down to this $26 level. We had a bounce, pull back, higher low, right? And here we are starting to move back to the upside. I like this one if it's able to break above the 50 EMA. If we break above the 50 EMA, that's around $40 thereabout. Then I'd look to establish a position above the 50 EMA, $40, in anticipation of a move back up to $59. Okay, so that's about 19 points to the upside. My risk level would actually become the 50 EMA. So once I get in above the 50 EMA, now my stop loss comes below the 50 EMA. So technically, we'll be risking about 3 points below the 50 EMA in anticipation of making 19 points to the upside. All right, so that's what I'm looking at. That's what, number 3. Okay, so let's keep going. I like this right here, right now. EXPI. All right, EXPI, guys, this is a real estate company, but it's cloud-based. So we all know cloud is the future, and I like this. Why? Because I see a pattern here that I recognize, and this is the third W pattern we see. So first, EXPI was in a very nice uptrend. They run all the way up to $90. Stock end up splitting, and then they come back down hard, but all resistance become support. And from there, what happened? What happened from there, guys? From there, we got a bounce. So we got the first bounce, and now we come back, we tap the same level twice. So here I'm looking at a potential W pattern to take this thing back up to around $70. All right, so from where it's at, it's currently at $46 to $70. Right? I like that. We're risking around 4 points here. So technically, our stop loss would go below 41.38. All right, and we're looking for a move back to the upside into the $70 level on a technical basis. So that's the next one. Next one that I want to bring to your attention here is going to be LI. LI also is a Chinese electric car company. All right. So when we look at the chart, and we only make the decision strictly based on what the chart is telling us. All right. So first thing we have to do, identify all the levels that make sense on the chart on a technical note. All right. So we see that absolute low for this thing is around $14.60. Price was moving in a horizontal basis here. Eventually, we get a break out of that channel, and we run as high as $47.60. And now price came all the way back down to the resistance level here, held as support here. Price bounce, pull back, we got a double tap, same support, and here we are starting to move higher. Now I like this right here, right now. I would scale into this position. So unlike XPEV, I'll take a little bit of this right here, right now. My stop loss level is really going to be below 21.36, and when price breaks above the 50 EMA, then I'd add more to this trade. The reason why I'm looking at this like this way is because technically me buying right here, and then he gets around to the 50 EMA, and then he can't break above it, I still get some profit, and I probably get out of the trade before it rolls back down to this level. Now if it breaks above the 50 EMA, the door is open for it to run back up to $37. Right, so from 25 to 37, that's about 12 points there, right there, 10, 12 points. All right, so technically that's how I'm looking at this. I like it right here, right now. When it gets to the 50 EMA, I'll be cautious. It needs to break above it in order for price to continue moving higher to the upside. All right, let's keep going. So guys, another one, this stock here, PLTR, very popular stock, but we don't care how popular it is. The only thing that matters to me is that I have to look at the chart and be able to make a technical decision as, is this a good place to buy this stock? Is this the low risk level to buy this stock so that I can make some profit off this stock? Okay, so when I look at it right here right now, what do I see? Worst case scenario, price comes back down to $11, 11 between $11 and $9. That's the absolute low support. Price run up, pull back, found a new support between 21 and around 20. All right, and from there price moves sideways for a good period of time, making a new all-time high up into the 44.90 level, and then we're back down here. We tapped the support one time, boom, run up, pull back into the very same support a second time. So just looking at this from my lens, I'm seeing where there is a potential W pattern brewing right here right now. Guys, remember, trading is 100% based on the probability, so nothing is guaranteed. Basically, when we take a trade, we have to make sure we're taking the trade at a low risk level, which means that if we are wrong, we lose a small amount, and if we're right, the probability is way greater. You know, it's a bigger win, and we can do that over and over. And even if we have several bad trades, because our risk reward ratio is correct in the sense that we take small risk with high probability, if we have 10 losing trade, it doesn't matter, because the last 10 times we win, it was bigger than the 10 times that we lost. All right, nothing is guaranteed. The only thing you can do to switch things into your favor is basically make sure you're taking low risk trades with high probability. Okay, so right here right now, I like PLTR. This is where you buy it, you put a stop loss right below $21. If it breaks below $21, we're no longer in this trade. We're risking around $2.50 some cents to make a potential $10 to $15 on the upside. Okay, all right, let's move on to the next one. The next one that I like, guys, is Marvell. Now when we look at Marvell, guys, Marvell is a semiconductor stock. Stock was in a very nice uptrend. We broke the support here. We can see uptrending support, and then we came down to the 200 SMA. All right, let's zoom in now. So since we came down to the 200 SMA, price bounce, run up, small high here, pull back, we got a higher low here, price run up, and now we break back above the 50 EMA, right, which was holding us support quite a few times. And also right here we have a bull flag consolidation that price broke out of for the first day here today. So I like this right here right now. We need to break above this horizontal level, but this is where you start to build a position in anticipation of a move from 48 up to 54. All right, so that's 6 points to the upside, guys. All of these stocks are stocks that you can buy with a small account, buying a minimum of 100 shares up to 500 shares if you can support that, managing your risk level, putting your automatic stop loss inside there, and just let these trades work out. Remember, the market is a place where wealth is transferred from the impatient to the patient. So you just want to do your due diligence in terms of understanding the charts, execute your trades, and be patient and give them time to work out. Guys, I hope you found some value inside this video. If you did, I look forward to seeing you in my next video. Thank you for watching.